Good morning. This is Ron Brown. It is September 16th, 2022. It's about 11 a.m. We're having another brutal day in the market, and I thought this would be a good day to show you something that I've been working on. And let's go ahead and get started. Once again, standard risk disclaimer. I don't need to read this to you again. You know that all trades are your responsibility. And if you want a free trial to HGSI for 30 days. If you're not using it, you should be. Just go to highgrowstock.com and look for the link for the free trial. Now this is Thinkorswim. I'm sure you recognize this now, and I have the Fibonacci retracements on here. This is from the low to the high, and as of today with this gap down, this 61.8% retracement has been clearly broken. As of now, we have a spinning top in the NASDAQ, and the next support level is down here at the 78.6%. Doesn't mean it's going to have to get down here. This is just a guide, but if this is broken, then there's a good chance that this low here will be taken out, and that would really be a disaster for the market. You can see that we're down 184 points today on the NASDAQ. Let's see what's going on here. Bitcoin's down again. Crude light is up slightly, but it's really been in a downtrend. And let's see what the bonds are doing today. The 30-year Treasury bonds are still going down, which means that the rates are rising or are anticipated to rise, so that's not good. And as rates rise, we all know that generally has an adverse effect on the stock market. Now, if you look over here, you can see that I've made a watch list with some symbols here so I can quickly track what's going on without looking at charts. On the NYSE, the decliners are leading the advancers. 2040 approximately to 1 to the downside. That's a minus, as you can see it on the NASDAQ. It's even worse, 2,500 negative stocks, or it's negative 2,546. Now, I'll just click on this, and this is a daily chart. What I want to do is I want to go to a 1 day, 1 minute chart, and you can see that when the market opened, it gapped clear down to here, and this is the 1 minute advanced decline line. Now, we did have a rally here for a short time from around 9:05 Central Time until around 9:41, and then it started backing off again. It's still higher here at this point than it was back here at the low point, but the trend is still down, so it doesn't look good going into the rest of the day. And this is triple witching, so it's just, you really have to be risk averse in this market. Yeah, you can play, but you really need to make sure that you control your exposure. Now I'm going to go back and just take a look here at the futures. These are the E-mini futures, and you can see on the daily chart that there was a gap down, and it's trading at the lower end of its daily range at 32.61%, so at a third of its daily range. This is the slight rally that we had, but it certainly doesn't look good. Now, of course, this can all change by the end of the day. We could have a heck of a rally, but going into the weekend, I think that's going to be highly unlikely. I'm going to get this out of the way, and let me show you something that I'm putting together. I'll include this in the weekend add-on, and I want you to delete my warehouse and chart views again this time before you install the add-on, because I've made some changes, and during the next week I hope to really narrow down the views and the chart views and some of the warehouse scans, just to come up with more workable, I guess is a good word, a more workable process. Because I just have too much stuff. I mean, I'm the first one to admit that. Now, I sat in on a IBD webinar the other day. It was a promotional webinar with Mark Minervini, and he was going through his process of what he does every day, and he always begins with relative strength. And of course, they do it a little bit differently with IBD and Market Smith, but we have all the tools. In fact, I believe much better tools than HGSI. And that's just my opinion. But anyway, let me show you what I have come up with. I've created a couple of, actually two warehouse views here, and I put it in a folder called Relative Strength Scans. Now here's the end of day version. Here's the intraday version. And the end of day version, what really drives this is the combo ranking, and I'm going to open this combo and show it to you. I have weighted these equally: raw, relative strength, percent range, and percentage price change one day, weighted at 33% apiece. Now, I used raw relative strength because it's more precise than relative strength, because it actually uses the raw numbers over here. We can have several stocks that are 98, 99, and so on, but the raw relative strength will differentiate those stocks. That's why I used it. Now here's what the end of day looked like last night. I'm going to disengage this combo, and I'm going to drop down to the intraday, and you can see that most of the stocks at the top of the list that were strong yesterday are weak today, because as you saw earlier, the market's under tremendous pressure. Now I'm going to reapply this, but now I am using the combo ranking for the intraday, and let's take a look at that. It's a big difference here. I hit the wrong thing. I am using raw relative strength. Once again, that is the intraday or end of day relative strength, because we don't have an intraday raw relative strength, but I have an intraday range and an intraday percentage price change one day. These are all weighted equally. So I'm using the base relative raw relative strength plus two intraday combos. Now the combo rankings are one of the most powerful parts of HGSI, and just look at the difference here. I can quickly see where the strength is, and First Solar comes to the top of the list today based upon this intraday combo. You can see that I'm sorted on raw combo, and as I work my way across here, you can see yesterday volume was above average, spread was above average, but the stock closed down. In fact, the 3 went down through the 6 yesterday, and the volume point of control went negative. But by using the intraday version of this relative strength, you can see that this is a strong relative strength stock, or a high relative strength stock at 98. The EPS rank doesn't even factor into this, and the group rank is 97 for an ERG of 197. Here's a Kirkpatrick RS rank 99. 99 out of 90, or it's at the top of the list, and I can see that over 5 days, First Solar has slightly underperformed the S&P, but over 10 days it's outperformed it by 5%. Here's the intraday information. It's up 3.03%, trading near the top of its range, and here's the volume. But you can see how these three factors, the relative strength and the intraday one-day change and the percentage range, bring these to the top of the list. And here's the industry group over here, which has that 97% group rank. I didn't factor this one into this particular scan, but let's just take a look at First Solar. Now here is First Solar on a weekly chart. Here it is on a daily chart. We're getting a test for supply. One thing I want to do is to make sure my industry groups are up to date intraday. So I'm going into industries and I'm going to rebuild the indexes in the group. So what this is doing is taking the latest information from the individual stocks and rebuilding the industry groups. It takes less than 30 seconds on this computer to do all the industry groups. It really didn't change much, but I can see that the industry group as a whole is down 0.78% today. I'm going to get this out of the way, and let's just take a look at this. Look where First Solar took off back here. What a huge move up on this weekly chart. And here is a low volume test on the weekly. And let's just look at this date, 7/29 it looks like. If I look down here at the bottom, I want to bring this up and let's see where we were on 7/29. If I look down here, right here is 7/29. So First Solar had this huge gap up, but notice that before the gap up, there was an effort to rise and the 3 went above the 6 clear back here. If you look down here, you can see that happened, and then the 6 went above the 18 here, and then the 18 went above the 50 here before this gap up. And this is when the so-called Inflation Protection Act was enacted. I believe this is the day on this huge gap up, but buyers were coming into this long before that happened. Since this viable gap up, this stock is up from around the 88 range to currently around 136. So that was just the beginning. Had a little pullback here and pulled back over the last few days, but we're getting this test for supply and it is moving up. And once again, if I bring this information up, the RS is 98. So this is my RS scan intraday. Now this is a pretty amazing performance considering the state of the market, but it just goes to show that if you're in the right groups with the high relative strength stocks, there are always opportunities in the market. Not everything, unless we have a total wipeout crash, not everything goes down, and that's the value of finding high relative strength stocks. I want to show you a different chart. I've eliminated a few charts, moved a few things around. I'm going to go to this contextual intrinsics setup risk charts folder, and I'm going to go to number 7. What this chart does is it gives us the relative performance of a stock comparing it to the S&P 500. So let's go back to this area over here. You can see here's this effort to rise. Here's another effort to rise. And this is the group. The group was going up here, but this stock had been building a base here for quite some time. And this blue line below the price represents the relative strength of First Solar compared to the S&P. So the S&P, put the crosshair up here, at this point had started to move up a little bit, but First Solar was moving up more. How do I know that? Because the blue line is heading up. That means that this is outperforming. And when we get up to here, you can see that the slope is moving up. and the S&P had moved up too, but it had pulled back, and First Solar was just here primed to go up, and then the announcement came out and the gap came up. But do you think there were some traders anticipating what was going to happen? It certainly looks like it in retrospect, but look at the volume that came into this stock after the announcement. This information over here on the left, it compares as of the close yesterday what this stock was doing relative to the S&P, and you can see over a 3-month period it's outperformed the S&P by, that would be 200%, it looks like. Now, we don't have the ability to go back and see what the RS rank was back here, but with this chart I can clearly see that this stock was outperforming the S&P 500, and you want a stock that is outperforming the broader market. Now, since I've been talking, notice how this has shifted. Here's a Maxion has risen to the top because of this combo. Let's just take a quick look at it. Bring this chart back up, and here's an effort to rise, a test. Here's a price rejection. Sellers took some profits, but this stock is clearly outperforming the S&P. The S&P, whoops, didn't mean to do that. The S&P is going down. Well, this stock is going up, and the blue line is going up too. The industry group is moving up most of the time, but it's kind of back and forth right now. But this is one of the leading stocks on a very bad day. Okay, let's go back. I'm going to go back up to my first chart here. You can see the 3 crossed the 6 at this point on an effort to rise. Let's look at the weekly chart. And what is this date here? This is 7/29, and that would correspond to this right here. Notice the 3 crossed the 6 here after a strength seen returning, VPA flag, and then a confirmation with an effort to rise, and that was just the beginning of the move. I'm going to drop back down to that other chart. So here we go, and even on this pullback here, it underperformed the S&P for one day, and then it was outperforming all the way up to this point. I find this blue line, the comparison to the S&P, very valuable. Let's look at the performance versus the S&P. Outperforming by 95%. I think I said 200% on the prior chart for First Solar. It would not be 200%. It would be 100%. This is outperformed by 95%. Anyway, this chart works well on these high relative strength stocks. Now let me move on. I don't want this video to be too long. I want to show you what else I did here. I just changed the combo on the end of day. What I did is added raw group in here also. And my thinking here is that if we can find high relative strength stocks with high group strength also, that maybe this is just going to give us some more insight. So let's see. I like the first scan a lot. Let's see what's going on here. I'll take this combo off. These are the stocks that were strong yesterday. If I go down to the intraday, you can see that these are all weak now. But I will apply the current combo, and this is bringing the same stocks up, a lot of the same stocks, to the top of the list. Why? Because the relative strength is high for the stock and also for the group, and the intraday portions of that combo are, and let me bring the combo up again, I've weighted the intraday range and the intraday percentage price change at 25% of the fields. So this combo is bringing these stocks that have a high relative strength and a high group rank, and the intraday change is strong, as is the daily range, to the top of the list. So all I did really was add the group component. Now let's look at this pharmacy stock here. And you can see it's had a bit of weekly run, a price rejection here. Here is the daily chart here. It's showing a test. It has been, notice the blue line here, has been going up while the S&P has been going down, and it's really found, well, it's got a higher low here than this low here. Dangerous trade, obviously, but the point is it's coming to the top of the list based upon the combo. I cannot emphasize how valuable these combo rankings are in HGSI, and you just don't find them in any other program. Let's look at a favorite here, In Phase Energy. I'm going to go back to my number 1 chart. You can see we're getting a test right here. Here is the weekly move. This has been a very strong stock. It was here, and then it came back down, had another run up, another one down, and now it's really out to an all-time high. I believe I'm going to do an alternate Y for a yearly, and you can see it's an all-time high. Here's a monthly, here's a weekly, and even though it's had this huge run, buyers continue to come in to support this stock. Once again, 98, 97, it's the same group. It's outperformed the over 5 days the S&P by 1%, and over 10 days by 10%. So with this scan, you need to pay attention to relative strength and group rank, because that's what it does. EPS rank doesn't figure it into it. EPS rank is really not a good way to screen. So look at these ERGs. Some of these don't even have an ERG ranking. It's nice when you have a balanced stock with a good EPS rank too, but it's pretty much irrelevant when it comes to relative strength in both a stock and a group. Look at these solar stocks. None of them have a decent EPS rank, but the stocks are trading near their highs. These stocks have a minimum price of $5 in all these scans. I'm accessing the entire database because the combo rank will drive the best stocks to the top. If I go clear down to the bottom here, look at the weakest stock at 2436, U.S. Auto Parts. You can see the difference. I mean, this stock at one time was a really good stock, and now it's fallen clear down to the 550, 575 range. And if we look at the relative strength, 13, and the group rank is 27. Here's a familiar name up here, DocuSign. Let's take a look at this one. Look at this. It's just gotten creamed. And I think Kathy Wood is still buying this stock, or she was back here after the earnings report. And this is the danger of bottom fishing. Yes, these stocks may come back eventually, but you may have a tremendously long wait. Let's go to that last chart here, or chart number 7. You can see that this stock was underperforming the S&P. Here, it was outperforming. Bargain hunters, bottom fishers came in. Look what happens when the market turned south. The group was going up, now it's going down. This is outperforming for a while, but it's underperforming now. The lesson is, don't try to bottom fish it. Just, in my opinion, it's just way too risky. Yeah, you know, if you have a long-term hold. Well, but why? I mean, it doesn't make any sense. Just if you're going to buy strength in a market like this, or buy anything in a market like this, make sure that you buy relative strength. Let's see what's on. This one is still on top, and this one, let's just go back up here. And you can see that rhythm moved up to the top of the list. I looked at this. It's holding up today. Here's one that appeared, NuScale Power Corp. It's holding its own. Let's drop down to chart number 7. You can see the blue line's going up. S&P's coming down. This one's holding its own. It's not going up, but it's stronger than the S&P. This is a good example of what this chart can show us. Okay, that should be enough to give you an idea. I'll get these scans out tomorrow. Remember to delete my warehouse views and chart views. And I will continue to work on getting my files organized and come up with a step-by-step plan for prospecting. Still considering doing a webinar series if there's enough interest. There really hasn't been yet, but maybe when I get everything organized and do a preview of what I want to talk about during that series, there will be more interest. Anyway, thank you for listening. Have a good weekend, and let me know what you think of this relative strength prospecting. There are other components that can go along with this. I just didn't want to get into them today. I should say other components of the program.